start big, ladies and gentlemen. Ryan Cohen has been officially confirmed as the sitting chairman of GameStop. This is great news, as Mr. Cohen has an incredible track record and is one of the truest and most serious apes. He knows exactly what is going on and constantly interacts on Twitter, posting mysterious images that incels on Reddit break down to mean all kinds of things. It shows he is actively involved with one of the most serious GME communities, and that is so good to have. I think both AMC and GameStop have sitting members on top who are looking out for the companies and their shareholders, and I am extremely excited to confirm to you guys that Ryan Cohen, the founder of Chewy, is our chairman. But it doesn't end there. Mr. Cohen ended his formal statement today with a banana fuel directive to investors, and I quote, "Thank you to everyone, and as my dad would say, buckle up. I am jacked up." He knows exactly what is coming. SEC Chair Gary Gensler is making headlines again, calling for more government oversight on the markets. He stated that he wants to fresh up the SEC guidelines. He asked his staff to examine best execution requirements and stated that the process for settling transactions could be shortened to the same day. I found it a bit refreshing to have the SEC chair make these statements, but I would take it with a huge grain of salt. I don't get excited until they start actually implementing real changes with real consequences for market manipulators. I just thought you guys should be aware of this. Today we also got the 8K filing with the vote count, tallying at something close to 55 million votes registered. This should slowly start moving things up. The goal of this is to commence a full investigation as to how many total shares there are. What could be the hand of hedge funds and banks is that they might be holding shares in depot accounts for foreign brokers. Regardless, this is super bullish and should start putting everything together. Now let's talk about the big news that came out yesterday. On a legal proceedings section of a Form S-4 filed on June 4th, the plaintiffs allege that Citadel, Robinhood, E-Trade, Morgan Stanley, and even the DTCC were all involved in a coordinated conspiracy violation of antitrust laws to prevent retail customers from operating and trading freely. It should come to no surprise to anyone that every single entity in the market is being taken to court with allegations of manipulation. They are or have all worked together in conjunction to bring retailers down. There is substantial evidence pointing and suggesting that the SEC and public pressure to big regulatory agencies like the DTCC will force them to push out DTC005, which is the last big proposal we are waiting for. Stay bullish, guys. This is all coming to an end soon enough. I know I will see some people raise worries about the DTCC being involved in this. Yes, people, these parasites, they are all involved in this. However, they are not one entity and they will cross and backstab each other for bigger gains. The DTCC stands to lose a ton of not everything, which is what has prompted them lately for all the proposals they have been passing. Do not be scared of that. The squeeze isn't going to happen because the DTCC is involved in the legal filing. The squeeze and this legal proceeding are separated in the sense that one will not prevent the other from happening. And now, for the main event of the evening. GameStop released the first quarter 2021 financial results. I want to warn you that you should do as Ryan Cohen advised and buckle up, because we are about to get jacked up. Net sales increased 25.1% to $1.2 billion, compared to $1 billion in fiscal 2020. They saw a 12% reduction in the company's global store base due to strategic de-densification efforts. Operating loss was $40.8 million compared to $108 billion in 2020 first quarter. Adjusted operating loss was $21.6 million compared to $98 million 2020 first quarter. Furthermore, adjusted net losses were $66.8 million compared to $165.7 million in 2020 first quarter. As you can see, GameStop has managed to cut more than half off their losses, an incredibly bullish performance by a company that was on the brink of extinction. They are on a full comeback mode, demonstrating growth and a turnaround. There was some tax information disclosed that we aren't going to cover since it's relatively pointless, but there you have it. The only figure that I wasn't impressed by was the reported selling, general and administrative expenses, which were put at $370 million, which was a decline from the $386 million from fiscal 2020 first quarter. However, the difference wasn't even 5%, so I am not concerned about that at all. These financial results are fantastic, and I remain super bullish. The company also quickly mentioned how GameStop is expanding on the items they sell, opening the company for growth in areas that are not necessarily video games and consoles. This is something we have talked about in the past. GameStop is venturing into selling gaming chairs, PC parts and toys. If you hold GME like me, this news should have you super pleased. They have totally defied every media FUD article spreading lies and bad anticipation to the earnings. GameStop has made a comeback and is on the road to a full recovery. But this wasn't reflected on the price action that took place in the after hours today. Oh no, we were brutally attacked today, with GameStop moving from almost 330 to 261. The dip was a thing that showed just how truly corrupt and manipulated the stock is. As such, a great buying opportunity arose. Due to this extreme change, every single pattern for GME is broken. Don't freak out yet, people. I can already feel your blood pressure rising. Give me a chance to break this down for you, because it is actually pretty good. The stock was dipped because Wall Street probably anticipated bullish news, which good job Kenny, you predicted what we all saw coming. The reason for this is because they were scared that GameStop could easily slip away with a thunderous bullish surge and cause the squeeze. GameStop is the only stock they have to keep down because it is the only one that will cause us to squeeze. As such, with a price dipped so harshly, I do not want to give any impressions of what could happen tomorrow. Anyone that starts doing technical analysis and charting on this, pressing what is most likely to happen is full of ungodly excrement. I see some support building at 280, which is good. I recommend people to buy this dip. I think hedge funds will use this opportunity to try to beat the price of both GME and AMC a bit more, which actually brings me to AMC. On AMC, we saw a huge dip as well. The stock actually started surging when GME started going down, which shows that the previously discussed relationship between these two is super complex. However, that surge didn't last, as the stock plummeted back down to $33 before bouncing up and recovering. Again, all technical analysis will be coming super inaccurate, and I will not be the one to start throwing what is most likely to happen tomorrow because it's impossible to range probability under these extreme circumstances. I wanted to release this video late today to wait for the conference and give you all the information in full. Thank you if you made it this far. Let me know in the comments how you feel about everything we discussed here today. You guys are the absolute best, and I cannot wait to sink money into these stocks again soon enough. I am actually kind of hoping for a bit of a dip and more consolidation so I can buy more at a cheaper price. Stay tuned, and I hope to see you here tomorrow. Thank you.